Okay, so what's up, everybody? I hope your weekend's well. We're gonna be going over two types of indicators I like to use while trading, and then we're gonna go through a ton of examples in terms of the 8 a.m. system, in terms of entries and exits, and then I'm gonna go through any questions at the end of it. It should be pretty self-explanatory, so try to have an open perspective. I don't think it's too complicated, but let's just get started. I'll answer all questions at the end, and I'll pause probably once or twice throughout all of it. So we're gonna start with the EMAs, right? We're gonna start with the 20, 50, 100, and 200 EMA. That's gonna be the colors you see on my screen. Um, 20, 50, 100, and 200 EMAs stacking on top of each other with the 200 EMA flattening and moving away from price can usually result in a bearish downtrend, right? So I'm going to highlight this example right here, and you can see how the 200 EMA in blue starts moving farther away from price as EMA stack on top of each other, and then price falls, and then we get something that kind of snaps with the pressure gauge, and we fall to the downside. This a really easy example to identify. Price stays below the 20 the whole time, and we start finally seeing some candles that want to escape a little bit, but this is a really easy example of a bearish downtrend. Some other visuals so you can kind of see what it looks like. Here's another example on 1025. You can see the 200 starts pulling away and price starts to fall, and you start trying to escape finally with candles going through the 50 and the 100 EMA. And then again on this third example, you can see it at the open and how the 200 starts to pull away from price, and the 20, the 50, and the 100 basically suffocate price. So this is a really easy example. And now, obviously, there's going to be something equal for the opposite, so we're going to show some bullish ones. This is a little laggy of a bullish example because you can still see how the 200 is still sitting right on top of the 100, and it doesn't really get that far away, so price doesn't move too far, but it's still a bullish example. Um, this is a better one in my opinion. You see three white soldiers come in, price moves in aggressively. The 200 starts moving away from price. You don't break below the 50 ever, and price stays in a simple uptrend. And then we can use this one as well and see how very early at the opening price stays above the 200, and the 20, the 50, and the 100 protect it for a long period of time. And by the time this started to breach, you could start to scale out. Um, we're going to quickly talk about volume as well. So we're going to move to. Oh, the stream is paused. Oh, that's awkward. That's awkward. That's awkward. Oh my god. That's so awkward. Ah. I'll re-explain it. I'll re-explain it. Can you see it? Please tell me you can see it. Please tell me you can see it. That's so awkward. Yes. Yes, we're good. We're good. Okay, sorry, sorry, sorry. I'll cut this out of the video. um, Here, I'll redo this really quickly. So, price falling, right? You can see this, the 200 starts moving away. The 200 starts to move away in this example, and the 200 starts to move away in this example. So these are bearish downtrends, and then bullish uptrends. This is a laggier one that I was explaining earlier, but you can see how the 100 and the 200 is sitting on top of each other. And then here's some other examples of how like the 200 and the 100 start separating, and you see a cleaner bullish trend. And here is a even bigger example. But EMAs are pretty easy to go over, so you can watch the recording as well for a kind of more in-depth visual of it. But I'm gonna go over volume now, though. My bad, guys. So this is a previous example that we just showed with the EMAs, but we're going to look at volume and kind of show how you can use different tools to basically associate the same move with just different analysis. Um, so this is a bullish into a bearish flip. Now, if you remember, we showed with the EMAs originally how the 50 and the 25 or the 20, sorry, started a breach into the 100, and it caused a bearish impulse, right? But you could already see that happening ahead of time with volume if you paid attention at the bottom. And you can see how you have a bearish candle followed by bullish, bullish, and you have this highlighted, but this bearish volume starts to show up a little more. And then you see a very aggressive short covering candle, right? And it moves them out the way. However, when the uptrend starts again after this large volume candle, you notice that the volume is smaller throughout the whole impulse. And specifically after these two candles, this is a large volume impulse but with a small body candle. So it's showing a little bit of weakness in the uptrend. And then you can see the volume start to flip throughout the bottom of the range here. It becomes smaller and smaller and smaller. And then bearish volume starts to step in and it basically overcompensates the trend. So this is a bullish into a bearish volume flip. On the opposite end, right, you can see a bearish into a bullish volume flip, but this is going to be basically exhausted bulls. So you can see how you have a large downtrend followed by aggressive bull volume. This volume, on the other hand, though, is exhaustive because you have large moves ups, but you can't even get out of the prior selling in the morning. And so when it comes back down, all you need to see is consistent bear volume, and you don't even need to see much continuation, which is why it's kind of flat on the bottom here, and you would expect more than this candle, but it's exhaustive in the sense that the bulls are exhausted, so the bears just need to be consistent in order to get new low of days. So yeah, we're going to talk about the 8 a.m. system really moving into the rest of this part of the seminar. I use this a lot. Most people understand that already, but most people get confused as to how to identify the different examples, and so that's why this is going to be kind of like a short but sweet revamp of everything and kind of just piecing it all together. But so a bullish neutral session, right? This stays within the 8 a.m. range and price doesn't expand to the upside, to the downside. A completely neutral session is going to be what's in front of you, and that's where price doesn't escape at all throughout an entire range throughout the day. It basically just stays neutral. Obviously, you see it tries to expand in these wicks right here, but you can see with the liquidity series stuff that I talk about how price can't get over those dark pool prints, and you see continued selling. So this is going to be a neutral session, but one with a little bit of a bearish undertone because of that. A bullish neutral session and is this. And now I know there's a lot of drawings, so we'll go over them. But a bullish neutral session is where it stays within the 8 a.m. range and eventually attempts a breakout, quote unquote, into expansion impulses. And there is a neutrality shift if continuation is claimed. Now, continuation is different across all different time frames, meaning that a 1 minute versus a 5 minute versus a daily, those trends shift and different perspectives, right? You need different follow throughs. So a 1 minute break is not as important as a weekly candle, being a bullish engulfing. But in this example, we have a range, our 8 a.m. range, and we have our liquidity series on the left-hand side. And you can see how price breaks through core here, right? But there's still some selling weakness in the morning that's picked back up. And you see the flip of the range and the liquidity on the left along with the 8 a.m. high. This stuff that we will reference a lot on the stage. And then you can see how we break through the liquidity range and the 8 a.m. high and the circle range, but it's still considered neutral because when we zoom out, you can see how price cannot claim the prior 8 a.m. lows, it cannot claim the liquidity from the prior session, and it can't close even above the 8 a.m. high. It stays very exhaustive into the end of the day. It can't close above that momentum and 8 a.m. high. So this is kind of a bullish neutral session. Nothing is really claimed into the end of the day. It sells off. It doesn't really break out midday like you would expect, so on and so forth. August 18th, I think, is another good example. You can see how price very quickly in the morning breaks back into the 8 a.m. low by 10:30 to your lunchtime. You break through core and you see a breakout. And you can see how price is supported and eventually expands into the next session, but you don't see a breakout into the end of the day, right? That liquidity from the previous session stays as resistance and price can't escape. So this would be labeled as a bullish neutral session. A bearish neutral session, ironically, is our most recent one on Friday. This is a little different though because we do have an expansive breakdown in daily lows, so it's not as neutral, but throughout the morning it was. We also shared this with the EMA example at the start, but you can see how price falls through the 8 a.m. low here and eventually changes from bearish neutral to bearish. However, in the morning you can see these circles that I have, right? And these are our momentum zones or golden zones on an intraday time frame. If you don't know how to find these, you just use a fib retracement candle right here, and you do it off the 8 a.m. low and the 8 a.m. high. But price is aggressive off of these levels and it burns premium. However, it stays bearish to bearish neutral because price cannot escape through the momentum areas and or the 8 a.m. highs and or the most recent liquidity highs, which is also our pre-market high in this example. But once price snaps through this low right here, along with its most recent daily low, you can see how we aggressively break down here. And that weakness is identified ironically even earlier because you can see the liquidity becoming weakness right here. And I like to talk about a lot when I'm on the stage, even though we just used EMAs before, how you don't need those tools, right? Now I'm going to say it's helpful if you don't use them, but or if you do use them, but if you look here, you can see how the liquidity broke down and we had a continued sell session to the 8 a.m. low and the low of that liquidity. But in this example, it's the EMA breakdown that we discussed. So it's the same thing, just a different way of explaining it, which is why analysis is really important to figure out which system you're using, and combining multiple can give you a better edge. But let's go to here. Sorry about that. So our next example, we're going to look at a bearish session. Now, this is really easy to understand in comparison to the prior examples because it's none of that really neutrality weakness is there. You don't have to deal with that. It's just a complete breakdown and or breakout in one side or the other. In this example, it's a bearish one, but we're going to look at this session. And you can see how the 8 a.m. low becomes resistance immediately. You never, ever, ever claim an 8 a.m. high. You don't claim any liquidity. You can't claim any cores from prior session, and you just see extended weakness. Now, to get expansive selling, what we can use is our other windows of time frames, which is our 5-minute, 9-minute, 15-minute, etc., and see how this cluster over here broke down and we continue to sell throughout this range, and you had an aggressive breakdown throughout the day, right? This is very easy to identify. So note, this is a complete bear session. Price cannot claim the 8 a.m. lows, cannot claim any liquidity expansion, and it's actually, in my opinion, pretty easy to see, but you always look out for that if you're looking for a bearish session. It also helps if you get a gap down, by the way. Like, notice how price was elevated and then it sells higher. Lastly, we're going to look at a bullish session. I think this is pretty easy to, again, identify, but we're going to look at a multi-day bull session because it's, kind of hard to see sometimes, but it starts on the 6th and it goes into the 9th and the 10th. But you can see on the 6th, you see the rally through the non-farm payroll numbers and the 8 a.m. low and high. And then the next day, the price doesn't even break through that 8 a.m. high. And we have a new range formed and it escapes the prior range that's priced in after hours. This is a really, really good example of expansion because following that, the next impulse prices in an 8 a.m. high and low range once again, and you see it immediately break out and you have an expansive breakout. So I think on a multi-day time frame, always look for these examples. You can also see how price tries to gap down here, but we hold 50% of the range of the prior uptrend. We can put on a fib tool to see that as well, right? So holding 50% of a previous range and then starting a trend in the upward direction and or breaking through that is an identification of a trend flip. This is a bullish example, obviously. Now, really lastly, we're going to go through a couple of examples, and I just have 3 of them, but we're going to go through an example of a bullish session, a bearish session, and a neutral session. And then if you guys have any questions on other tools to perhaps use, let me know. But we're going to go to a bullish session first, and this is NVIDIA. You can see how NVIDIA on the 23rd, it stays in the range of the 8 a.m. clusters, right? And we break through that liquidity here. You break through the low here. You break through this liquidity range. You break through this local high. You break through this 8 a.m. high. You have new liquidity that expands price upward, right? But the main key point is staying within that 8 a.m. range. It stays quote unquote neutral starting the day, that bullish neutral start. But once that expansion happens here and then it breaks throughout these upward deviations, you see a really expansive impulse. So I think this is a really good example of what to look for. It's those prices immediately punching through some consolidation and then follow through once again. Um, a bearish session. Now, this is after Tesla's earnings. If you want to note the example, this is recent. A bearish session is obviously, again, in my opinion, easy to identify, but you have your 8 a.m. range, you have your most recent liquidity and prior sessions. We can also zoom out if we really need to, but I'm going to do this just for you guys. But you see we break through the lows, price expands through this 30-minute window, causing a extremely bearish session to start. But we can look at our most recent time frames and see on that particular session, price again stays through the 8 a.m. high and low range. You immediately expand to the downside. Price does not claim any momentum whatsoever on an intraday stance, and you expand into at least a deviation to 2 deviations to the downside. So it's really easy to identify. And then lastly, we're going to talk about a neutral session. Apple is one of my favorites for this because Apple is often used to stabilize the market. People know this, but they don't really know it in regards to how often. And you'd be surprised if you day trade this. I think it's one of the best to day trade with because most people don't know those ranges are really easy to follow when you are using this 8 a.m. example. But when we're looking at this, we can see how the neutral range stays throughout the 8 a.m. zones, and your 8 a.m. high flips and your momentum flips cause breakouts, so you can use entries and exits in regards to shorts from these positions, longs and momentum scalps, and overall trend impulses, aka longing the lows, selling in the medians, selling at the highs, selling at the range breaks. And I think it's pretty easy to see. Now, the other part of this seminar, we were talking about risk sizing, and I have a pretty basic list of 5 rules to follow. I always check this. I write this on the top of every single note page, really, for some of at least the last part of it, but it's pretty easy to follow. So, risk sizing 1 to 3% max allocation for any position other than weeklies. A weekly is considered a week to 3 weeks. Some people basically call them monthlies. That's also fine. Weeklies less than 1% to 0.5% or 0.5%, sorry. So under that 1% threshold for weeklies to monthlies. If you're not an options trader and you're an equity trader as well, or investor, 25% of your portfolio towards options, maybe 15% if you like a little less risk. And then everything else goes into investments such as treasuries, bonds, stock. Swings 6 to 12 months of times in terms of your options. 3 to 5 strikes out the money, 30 to 45 delta. A leap, aka a year to 2 years. You can do 5 to 7 strikes out the money. I would recommend more near in the money if you can, so you can take advantage of that premium protection. That's why you're buying the time to begin with. But if you can't afford it, then 5 to 7 strikes max out the money. And then weeklies, something to note for risk tolerance, and even though I just described them as a week to 2 weeks to a month, I really think of them as 1 to 3 months. But you mentally need to think they go 15% down to 50% down automatically when you buy them. Now, I know you might be thinking, what, that's extreme. Why would it go down that low? But those options, no matter what, are high risk trading. It's you trying to time the market, and not having that expansive risk tolerance can easily get people stopped out. Now, it's personal in terms of what your risk tolerance is. So I would say develop that strategy for yourself and figure that out. But I would recommend at least 20%. That's pretty fair. If you had a job position at like a firm or something like that, they wouldn't even let you have 5%. It's a dangerous number. And lastly, even if we have all the technical tools in the world, so talking about the 8 a.m. range, talking about the EMAs, volume, fibs, whatever you're using engulfings, etc. You can never control the outcome of a trade. This is something that I was saying earlier. I love to write on the top of all my journal entries that I'm doing, my note taking. The only thing we can do is control our risk and allocation sizing and the trades that we are taking. So always try and put yourself in the best position possible. And obviously this was a little bit of a shorter one, but I thought it was pretty self-explanatory. It's just at the end of the day, price expands through the 8 a.m. highs and lows along with any liquidity. And then you use volume, EMAs, etc. to figure out those intraday trends and then figure out if it's a bullish neutral, bearish neutral, bullish, bearish, or neutral session. So if you guys have any questions, let me know. I'm here to answer. I know that was a little bit quicker, so. Also, I'm sorry it paused. That was so lame. I wish it didn't pause. Elaborate on the 1027 golden zone. How to apply this to futures? Okay. So 1027 golden zone. We're going to talk specifically about SPY. Yeah. So 1027 golden zone structure is interesting. I'm glad you mentioned this. This is basically when you have a bearish session, and what I mean by this is price cannot escape the 8 a.m. range, right? But you still have your momentum fibs here, your 236, your 5, your 786. These are becoming resistance, right? You can easily see these upper wicks. Oh, my cat's sneezing. You can easily see these upper wicks off of these fibs, right? And we're just doing a normal intraday fib. And then the golden zones on the bottom, those 1618s, 1272, the 618s, the 382s, well, these are resistance, but the bottom ends are providing deep bounces to start. And it basically burns 0 DTE, 1 DTE, 5 DTE, really premiums and weeklies and your monthlies. And it causes sideways price action and impulses don't expand. Note, this is a neutral session to start with. It's a bearish neutral session. So when we're looking at this, we can set up a short trade. So I'll just use this for example. Your 3-2 immediately breaks, causing a breakdown, and that means you're targeting the first golden zone. And you can see how quickly price does it, right? And this is basically a 6.0 RR. But you can see how the impulses become a little harder. However, they are repeatable once the levels fully do become resistance, right? So when we look at this, that immediately breaks down. When we look at this finally sweeps, and then you can kind of just keep shorting the whole and playing those breakdowns. So I hope that makes sense. Let me know if you have any questions. Now, for the futures trading, again, the only thing you can really do is kind of flip those 8 a.m. levels that you have on SPY into the ES levels. So use a SPY to ES converter. In regards to HSI in particular, that is only HSI, so there's nothing really you can do about it. And then the 50 plus 20 EMA breaching the 100. This is a really, really easy flip signal to identify. It's when price starts to kind of break in the opposite direction. So you can see how in this example, the 50 and the 20 stay resistance the whole way down. But once the 50 starts to breach into the 100, you can see how price is trying to escape a little more than it did in this trend. So it's something that you can kind of repeat on multiple time frames. So when we look at this example again, the 20, the 50, and the 100 stay resistance. Once it finally starts to bottom out and breach, it eventually breaks higher into the 200. And same with this example, right? We see the 200 run away, and then you start to breach into the 50. 50 expands into the 100. 100 expands to the 200, and then so on and so forth, and then the selling starts again. So, hope that makes sense. And then Mac, you asked, can we talk about the 8 a.m. range? What is going on at this time? Well, obviously it's not 8 a.m., my friend, so there's not much I can do for you. Really, the only thing I can tell you at this point in time is that we have a intraday roof sitting at 413. That's provided with this most recent liquidity. We have a momentum flip at 411s through 409, and then we're going to use our 415 to 418 with confirmation over 421 to 425 as a breakout. So that's what our flip to the upside would look like. Anything under 409, obviously pretty self-explanatory. You're going to continue your selling once again. But obviously it's not 8 a.m., so there's not much we can do. The only thing we can really do is see how our impulse played out on Friday in particular. And is there any other questions? How does the other, can you word that a little differently? What do you mean by that one?